welcome to the Breakfast Club. My name is Darren Hancock, and here it is, September the 9th, 2024. Man, this year's really cruising through. Summer is pretty much over now. We're getting into fall here in Canada, and it's starting to look lovely out there. You're just starting to see a little bit of some of the trees starting to drop leaves. They're not even changing color that quick. But otherwise, everything's great. Hope you guys are having a good old time. Here's the daily chart here in the NASDAQ. Let's get right to it. It's Monday, and we've had some really nice down days in the last week. What I was kind of marking up my charts this weekend, and I was marking this upside imbalance here through this volume imbalance we have here, and we have another price imbalance right here. We've returned right up to that price imbalance, and we traded through and filled the thing completely, and now we've had a little bit of a retracement off of it, and now we're digging back into it. You'll see at the lower levels here. If we hold at this and we continue to run back down, for me the draws belowest here. One more time, start digging down into these imbalances, fair value gaps below us here. New day opening gaps, new week opening gaps. Let's look at some new week opening stuff. We have a fair value gap here on the weekly. You should be marking out your charts. That'll be a weekly chart. We have another weekly down here. So as we start getting into that grayish color, then I know I've got a weekly imbalance coming up. Make sure that's on the right one. Do you guys all have a good weekend this weekend? I hope so. And we have a little weekly imbalance down here. So. I think Michael mentioned in one of his videos that these lows are in range. We have equal lows below us here. The next one is this big weekly wick here. I'm taking 50% of that wick on the weekly, 25%. We'll see what kind of a reaction we get off that. But when we start to get below this yesterday's or Sunday's open, then we'll see what one more we have in store of it for us here. If we start running through this, then we're going to look back into this fair value gap above us here, the daily, and this weekly inversion fair value gap. We have a fair value gap right here. It's not marked out yet. So we'll see what we get when we return back into this, if we return back into that price imbalance here. We have a 4-hour fair value gap here. Consequent encroachment of that is that imbalance on the daily. And we've worked all the way through that already. We worked through the 50% of that, so I'm thinking we might have another little run up into this weekly fair value gap up above us, and perhaps close this fair value gap we see here on the 4-hour. We might see this continuation down here. See how the bodies are respecting inside that. Daily price imbalance. We just had wicks. We wigged all the way up through it. Bodies are respecting the 25% of that wick. We just ran above that into this fair value gap here on the hourly. I'd like to see this roll over here now and start coming back down. We'll see what kind of support we get off this. If we don't get support off of this, we're running back down into this range deeper, 50% of the range, fair value gap below you here. Keep your eye on this wick. We'll see what kind of support we get inside this wick for 50% of that wick. If that holds, then look for further upside. Let me make sure I've got my sound turned off here so we won't be hearing myself. 7 people watching right off the bat. Good morning, everybody. Good morning. One minute chart. Let's have a look what we got here. And then I'm going to go through so this is that daily price imbalance we got right here. Relative equal lows. I just cleaned out a little bit of the low here. And I just want to see. That'll be the opening range when we get to it. It's going to get below this level right here for me right now. It's going to close below that first before it comes in inversion, but we'll give that range. And then a little point of interest I'm looking at right now is perhaps here. Come right down to this level here too, 50% of that range, order block. This breaker here, 1, 2, 3, 4 candles. Let's hit the top of that right now. So we just dip down into here, you pull your fib on that. 50%, hitting this breaker right here, these 4 candles. These together, take out this high, that high. So we're just retracing back to 50%, hit that breaker. That's not inversion right now, so I'll make sure that's, oops, it's not an hour either. We're just reclaiming this fair value gap. Unless we close through it. which we just did. So let me put that back. Find support on that. This is a downside objective right here. If we get it back up on top of that, watch this wick here. We only get about 50% of that. So far, we've got a run down into the breaker. Let's see where we close above here. There's 50% of the wick. Now we're above. So we just dipped into 50% of this. I know you're looking for this to go above these highs now. Get through this level. Morning, Craig. Hope you had a good weekend. Dave Barry, good morning, buddy. Hans, good morning, good morning. And Russell, good morning. Again, this is the price imbalance on the daily. Let me get down into all this stuff here. We hit the natural gas. That was our upside objective the last few weeks. What was this? 1, 2, 3, 4. So just last week we were talking about this getting back up into this range, and we're hitting that now. So now how we act in here is I like to see that gap on top of this daily price imbalance, and I want to see that start pushing higher. We've had a nice little bounce run all the way back up here, so I'd like to see this continue climbing now and get out of here. We'll see how it acts inside this level here now. natural gas that's given us an upside. We're looking for this old high here, and I think it just closed above that. What's this high here? 2304, and this is 2305. So we had 1 penny above that high. Coming back into this order block. We're right back to the open of that, and we've had a nice reaction off of it. So I'd like to see this continue going higher now for natural gas, which would be in alignment with US natural gas. You want to see them, yeah, get through 231, climb above new 231 on a close, and then you got these equal highs above you here at 235. See yesterday's fair value gap here. The lunchtime reverse above, come back inside, take out the old highs. Back to this order block, mean threshold holds. Took out some lows, reverse. If you can't get back into it here, look for this order block. We get the top of it here, continue going higher, taking these highs. For this whole run to be taken, you need to see this breaker here get taken on the downside for me. And that fair value gap to close through along with this one. We don't have it. You just have a run back inside this frame for optimum trade entry reversal. You get through this fair value gap here, comes inversion. We have a small little imbalance down here. A little gap in price. We're back into the mean threshold of this candle. Mean threshold of this down close candle. We did trade through it a little bit, but it holds here. And this one holds, this mean threshold here holds. And we take out the premium array to the upside on, nope, not on a close. We're just inside this range here. It's a little imbalance and stuff here. We're right back in that. Reverse. You don't get this one here. You close above, you tap it, continue taking out the highs, reverse, trade into it, back into this candle. So you've got that one and that one. Discount array, you're right back in the consequent encroachment of that one. Right through here, and then through it again on the other side. Wait for this to get taken out here. Trade back to it here. You close in the fair value gap, and then you want to see us get below that. It does, and then trades up quickly above it. You get one opportunity to get out, get back in alignment with it. And we're back up to this premium right here. Reverse. It's interesting to try and stay on point with these just inversions and fair value gaps, and how that's quite a significant run you'd be willing to undertake in Bitcoin. You want to see this top piece taken out here, this top candle, which is your breaker. These last two candles, take out this low. They're cleared. You come back inside this run here. I'd like to see it taken on a close. This one's the close, comes back, finds support at it, goes higher. That's another trade model entry. It's not a inversion fair value gap. But if you're trading the inversion, you close above it here, you come back multiple times and tap all inside it here. If you draw that out, and then you want to run for relative equal highs here. Highs are taken now. Let's have a look at soybeans. We finally got a retracement back to this level we're looking for the other day. On Friday, you got to retrace right back to it. Today we opened right on it, and now we're climbing higher, which is good. I want to see that continue to push up higher now in soybeans. Our mean threshold is holding. So you want to see that come back to CAM model 1 entry. I wouldn't want to see it get any lower than this level right here. I want to see this all stay open here now. You can just tap in below it, and then I want to see it run up. If not, look for a return back into this breaker right here, these cluster of down close candles. This old high here, which is 50% of that range it created already, to go higher. We may just dip into this candle's high, or it's open. Change in the state of delivery and break in market structure to the upside. Sugar is still heading down. Looking for this gap below us here in sugar. Oh, this is a 1 hour chart. For the lack of a better word, we'll call it a fair value gap, even though it's not. It's just a price gap. The liquidity void here. There's no liquidity been delivered, so that's a liquidity void. Make sure that's we're through the consequent encroachment of this candle. Look at how we held up on it for a bit and then finally drove through. So looking for these relative equal lows back into this liquidity void below us here. Coffee retraced right to the spot we wanted yesterday or on Friday. Look at that, right to the consequent encroachment. Premium to discount. Now I'd like to see it run back up through here, not just stop here. I want to see it get some legs now, get through that wick of this candle and either climb above here or drop below this level. We have relative equal lows below us and this liquidity void below us, below here. And it hasn't quite been filled in yet. So if we do get a return, I'd like to see this just turn into a wick today and start coming back down into this level. If we do get a push through, 25% of that wick is all I want to see for continuation on the downside. If we do get to 50% of it, which is 50% of this wick or this breaker here, it's the last down close candle in this run that takes out this old high here. See this swing low and that swing high? This candle initiates the run above all these highs. We get a reversal, trade back into that fair value gap, continue through to the discount array. Now I want to see that mean threshold hold price, and there's a small imbalance in here. One more time. So if this doesn't hold, that's my line in the sand. If we close above that, look for this a run back into here, and if we get above that, then we're looking for higher prices. High to get taken out again. I'm wondering if this these relative equal lows are in range, and if they're gunning for those, we lose the half of this wick, we're looking for lower prices, and then back into that one we've marked further downside. Live cattle, we're getting through, we broke through the from here to here premium off these last two up close candles that initiate the run below these lows. This is the breaker. Return back inside the breaker. It held price and we drop below this fair value gap here. So if today we close below this, come back up inside to the consequent encroachment and see that continue on going lower. That's the downside objective for me. So we'll see how it acts tomorrow here and continues on the downside for this rest of the week. We've come back up, we're back inside this breaker. Sorry, this liquidity void here or gap. We're back up inside that. Now that we've taken the low on that candle is 819, 802. $847. So this took out all these lows here. If we climb above here on a close and take out these two candles, look for a run back up into this range again here. If not, I want to see how it acts inside this level here. If we just get a little pop off of here and start rolling back down, consequent encroachment and the high, those are the three levels I'm looking for inside here to either go lower and see how quickly we react off of that in cocoa. Well, we returned right back into the breaker on Friday, and now we're getting a nice reaction off of that. So again, downside objective has been marked. I want to see, so far it's panning out where we want it to. I want to see if that lumber continues to come down into that 450 range. Pull your fib from here to here, you'll probably find we're right near the consequent encroachment of this range. Let me have a look. Sorry, let me get back down here. There's your 50%. Just into the just above 50% to the premium area of that gap, and now we're rolling over. Now for me, you want to take out this low here, this fair value gap. If it finds some support inside here and we continue to push higher, that's great. If not, how it acts at this 25% level and whether or not it takes out this candle's low. That's what I'm looking for in the lean piggies. And we're going to go back lower if we do. If we close below 25%. Hey, there's a 730. Let's quickly look at some more of these. Now I've got a whole new level I'm looking for gold. Look at that new week opening gap, closed on it, open inside it, continue climbing higher. We have an hourly open fair value gap right here. We've already filled it once. We've traded above this candle. We've traded back into it. So we're looking for higher prices. We'll see how we act inside this candle's wick. 50% of that wick puts us somewhere just inside here. That we had a reaction off that 50% of the wick already. Now we're going to continue pushing through it on the hourly. If not, then I want to see it run back down inside this box here. And we'll see how far into the box it digs. Trying to catch up on some of Michael's videos this weekend. Just because I want to hear what he was talking about when I was talking about the same days. So I'm interested to see what he comes up with. And see how close I am, if at all. Oil. I did a lot of journaling this weekend. I shared my charts on the Telegram channel for those who are interested. Another really nice example of a reversal here. Come back inside it, continue inside this range. You want to see if it trades through here for it to continue. So watch right here. Trades right through it. Comes back up. Cam model 1. Takes the lows. Look at this candle here. Trade below it. Back up inside it. Inside this gap. Continue running lower. Reverse. Right there, you trade back into it. Inside this range, trade right back up into the premium range level. And when that gives way on the downside, which it does right here, trades back inside it, gives you an opportunity to go shorter. The run for these lows, takes the lows. And now I've got nothing in here until we get above this level here. Otherwise, mean threshold to hold price. So this imbalance, we'll see if this imbalance holds price or we get above it. And then you got this imbalance above you here. You ideally want to see the upside get taken and break in structure back here using this candle as support or this wick to go higher. If not, you want to see this fair value gap below you get taken, trade back to it and continue short. And remember, my overall objective has been, let me have to go to the weekly here. You'll see it better on the weekly. Those are all my notes I was making. So I'm looking over here. These lows to get taken. And all this stuff down here. $62. You got these equal lows at 62.42 and 61.76. So we'll see if it takes a run on those first before going higher. That's for weekly objective. So here we are trading through these levels now. I'm going to see it close above here and find some support and start climbing higher. And the weekly lines up with that mean threshold there. So I just want to see if this breaker here holds price. On the close. Oops, you don't want to see all that lot. This was the I think this was the hourly we're looking for. No, yeah, hourly. So I want to see this take out this high here, find some support, come back into this range. If it does, I'm looking up inside here. I remove get rid of my drawings. I've already labeled those. So let's do this one. That'll be my area of interest. If we get above here, we've got this first area here, this little gap, and we need to climb above this as well in order to reach for this. Otherwise, we're just inside this range here. Take out the highs, come back into this range, and then this fair value gap provides is what I'm looking for support or resistance. I'll see how it acts inside here. Yeah, relative equal highs above you. All this has been made jagged now. If we do climb above here, upside objective is here, area of interest is here, pocket, order block. These are key levels that I'm kind of looking for in terms of that small range. Not that I'm actually trading this, we're just using it as a form of, it's interesting. We're just watching the opening range now. We went all through that imbalance, came back into the 25%. Start pushing higher. Looking for the weekly. Then that fill on the, there's a 1 hour fair value gap above us there too. Let's see this one. $15 right above us here as well. We're just digging into that now. Oh, smokes, there's a lot of people chatting here. Hang on a second. Good morning, Russell. Abs, good morning, Curryfish. Hadi, good morning. Derek, good morning, Derek. Good to see you, buddy. Campion, good morning. Thank you. Anyone think we are in the middle of a market maker sell model? Yeah, we might be just getting a small retracement here before heading lower. Russell looks like a market maker buy to the lower time frames. We are respecting 1 hour fair value gap, so we may go lower. Maybe opening gap. I think we will take out the relative equal highs early this morning. I'm looking for price to take out the low of London slightly before I'll reassess. Just look at the relative equal highs for the early morning. Maybe it will dump now. There was yet another nice buy setup just before the market opened. I've seen this happen several times now. Volatility and QNAS. Only one thing I see was price taking out substantial low at that time. I like the idea that we've now keyed off this order block here and we're starting to look to go higher, getting a reaction off of this level. I want to see that continue climbing higher now. On a 1 minute chart, it's looking a little choppy. Get rid of these guys now. We're acting off of that daily price imbalance right now. Bodies are respecting that. I want to see it get some support off of this. There's nothing in here for me worth trading right now, so we're just watching. But we are getting a nice little reaction off of this first fair value gap. Oil on the 1 minute chart has done a taken out some little highs, created a reversal. We've traded below it, taking out the low at 730. Sorry, that's my time, so that'd be the 930 low. I'm just looking for that to continue going lower now. How do you like your paint? I like it wet. Waiting for it to dry. Good morning, Shepard. Triple Q, how's it going? 50% impulse, down level. $15-minute. You got a 15-minute fair value gap here. We've cleaned down a high here, so I'm looking at this level. That first fair value gap, I'd like to see that get used to go lower. I'd like to see that close there first before we leave that open. On a 15-minute chart. I don't know if I said hello. Good morning, Joe Mack. How are you? I just want to see wicks here now. See if this ends up being a big bold candle. We close here. What you'd want to see in terms of definite convictions to go higher is if we get a big bold candle here that's larger than the rest of these, like that, and that closes out, and we have an immediate rebalance. Come back, give us an immediate rebalance, come back up into here. That's a big displacement, so come all the way back to this candle's opening. Gives a quick immediate rebalance and then a snap off of there before that candle's finished. it's not afterwards. It's going to be in the same candle, very next candle. So this is our fair value gap here. These are taken. Five-minute fair value gap, I think, has been done. Yeah, 5 minutes done. Watching here, I want to see this get taken out on the downside before I consider that returning bearishly. So we'll just kind of watch this here now. Turn back into that order block. Back into this last down close candle. There's a little swing here that takes in all these highs. This breaker, we just hit the high of it. Now you want to see it react off of here and start pushing higher. I want to see that last piece stay open. I don't want to see this fill here now. Seeing it loses its luster if it doesn't go like that. Look good there for a second, and then all of a sudden it get back into the fair value gap this morning. So you have to take this low out here, otherwise it's still going higher. Bodies are respecting just above that. Consequent encroachment. Just return back to that fair value gap in the morning. I want to see this keep pushing higher now. Regular trading hours. Let's have a look at that. That's right. And it's huge. And we'll kind of look for oh, that's 50% there. And you'd be looking for a return back into the, I think Michael had one of his trading models, which was on the open. Once you see an opening here, you can return back to 50% of the wick or of the range before going higher. We've gapped up. That's a regular trading hour premium. You see how this supports price. We're above this here now. We're going to go higher. Just looking for it to start digging up into that hourly fair value gap some more. We're about to hit the consequent encroachment of that. Was it hourly or, sorry, that was 15-minute. Nope, it was not 15 minutes. It's hourly fair value gap, but that does not look like the hourly. The hourly is way up here. Oh, I'm in regular trading hours. Stand by. There we go. Oil's had a nice little change of direction. If you see a nice little reversal in oil here, it's right here. Nice reversal, tap it, continue on, looking for this upside objective up here. And these relative equal highs, and see if we can get through this fair value gap above us here. If not, look at the range that you're in. Morning fair value gap, through it, support it, keep going higher now. See what kind of reaction we're getting off of this consequent encroachment of the hourly fair value gap. Down on the 1 minute. I want to see this here give way and then get back through this fair value gap below us here. If not, we're going to keep pushing higher. Want to see this now? See how the bodies are holding on that right now? See it get above that and start pushing higher. Oil's reaching into that premium portion of that small range we're in right now. See it start really climbing up out of there now. And support at that, keep going higher. Drop below her now. See that? Right there. So I want to see this low get taken out here. Right here. Didn't quite see the return to here. You see that? Fair value gap there. We didn't trade back into it. So I want to see this trade below here now and get below this candle. And then we're looking for, obviously, a run below this low in the breaking structure. Oil. Looking for here. We've traded below this one now. We've come back all the way back up inside it right there. Trading inside this range. We're between this one here and this one here right now. I want to get above here. Yeah, I won't be gunning for regular trading hours unless we take out all these lows here. And then we come back into this consolidation. We're trading up into here now. We've taken out a low here. I haven't taken a low here though. I'm really overlapping here, so I wait. And oil, you want to see that little reversal on oil right now, right here. I want to see that level get taken on oil on the downside. If we don't, then you got a silver bullet here to go higher. Look for this to provide support here now off this candle and go higher. It's a nice displacement candle. And oil's still in the premium of its previous little range, so you got to wait on that one. We got this old high here, consequent encroachment between here and here, and that box there. I want to see it snap away from that nicely. You want to see this stay open, the rest of this stay open here now. That fair value gap in oil still supporting price right here. Right there. 691. And the fill on the 1 hour is 742. Right here. And see, I want to see it stay here now. That's the low right there. The oil is now taking out its recent highs. Bodies are still holding up on top of that order block here. So you'd want to see this low get taken for sure. And this, ideally, I'd like to see this low get taken before I run back into thinking about that regular trading hours gap again. But for now, we'll look at this and this. Okay, we've traded below. We'll trade below here. We'll see where this one closes. We're deep inside this breaker already now. All right, we're through that. Okay, we can get a return into here. Back found support right here. See that? Let's see, wait for a return into here or into this fair value gap below us. We've ran through 1, 2, so look for this guy here. We finally traded below that. Anywhere inside here now. Basically, I'm looking anywhere inside that box right there. Now you look for that regular trading hour gap again, which is this box here. You're looking for that. Come back up inside here now to go shorter. You're just keeping your eyes on this breaker here, this fair value gap, and a return back inside here. We have hit this low again. We've come back, retraced into the bottom of the wick here. I'd really like to see this wick stay open and just gunner down now. You want to see this get some legs. Let's see 50% of this wick traded back to. And then just exit straight down. And oil's just sideways right now. So we're going to wait on that. I want to get through 50% of this candle here, which is mean threshold on the downside. We're working our way through that daily price imbalance again. I'll watch the midpoint of that as well. Trade back to the midpoint here. I want to see it react off of here and start coming back down. Turn back to this breaker. Let's get some big draw here, big run down into this regular trading hours below us here. For this mean threshold here to give way. Hi, Paul. It's been a long time, buddy. Haven't seen you for a long time. How's things? I hope things are well with you. It has been a long time, my friend. I hope things are well with you and your family. We're looking for this consequent encroachment of their regular trading hours now. Down here. Oops. We've gone for a full fill of that all the way back up into the consequent encroachment of that. Oh, that's sorry, I was on the wrong one. Yeah, we've come all the way back up to the order block breaker, I guess you could consider it, on the 1 hour oil. See if that mean threshold holds, and we start to get a reversal. I'd like to see this really get some legs now, start to really push down harder now. We just come back, re-engage this fair value gap. You want it to stay open, and I wouldn't want to see the consequent encroachment get traded through. And I want to see it just start really gunning it down now. Try to get back into that consequent encroachment of the regular trading hours. $68.42 for oil. Another few more cents. And then I'm looking for, see how we react in there. Doing great. Lots of traveling. We'll be trading properly again soon. Yeah, I'm doing a big travel run this week or next week, I guess, coming up. So I'm looking forward to that. Spending a few weeks in Thailand, 3 weeks in Thailand. I'll try and do my morning show from Thailand. It won't be till like 8 o'clock at night in Thailand though, which is yeah. What time is it in Thailand? What time is it in Thailand? Bangkok. It's 9:35 p.m. So I'll be doing an evening show in Thailand for your morning enjoyment. And then we'll be hitting it full time again when I come back. Trap all 9:30. Yes, all the 9:30 people are all being scooped up now. There's 68.42 in oil. I think we made it to 68.45. So we'll see where that closes. Still looking for consequent encroachment of that regular trading hour gap now. See how we used the new day opening gap? We traded below it, traded back up to it one more time, and then left with some aggression. I like that. I'm just going to remove my, oops, did the wrong one again. Did I lock that in on the daily? Sorry, standby. Got mine off to work. See you later, Dave. Thanks for the info. Sign off. That's great. You will love Thailand. I hope so. Got my stepson's going to be getting married out there, but we're going out a year in advance. It's going to be fun. So we're going out a year in advance to get everything set up, and then go back there next year. Watch a ping pong show at your own risk. Feel free. Google. Yeah, I'd love to see a Thai boxing match and one of those Asian ping pong tournaments. Those guys are insane. I used to think I was really good at ping pong, table tennis, whatever you want to call it. And man, I've watched some Asian people play, and it's just smash game. I'm just dropping my stop loss into profit right now. Make sure. I want to see a big hard drive down into here now. I want to see this start to reach back and fill this rest of the fair value gap in here. But like Michael says, you can pay yourself a portion here and pay yourself a next portion down here. This is the regular trading hours gap. Always, always, always pay yourself here and here, because you may get a dramatic reversal. If you don't get, it just comes back to 50% and takes off again. Don't always count on it filling. Wonder if price will target new day opening gap low now. One PD array at a time, my friend. One at a time. It's nice to gun for the old low. Got a new day opening gap. Consequent encroachment below is here. We got a new day opening gap high here. The consequent encroachment will put us back to a regular trading hour fill. I'll leave that on there for now. And right now, oil is just sticking on that regular or that mean threshold we talked about. I'd like to see that roll over now, start coming back down. Oh, we are not talking about that ping pong. Oh, we're not talking about that ping pong. Oh. Okay, so I'm looking right here. I don't want to see this. If we look at this high, looking for a small little run back into that range there. I don't want to see that candle's high get taken. Mean threshold of this candle is as far up as I want to see that go. Wick wise, that is. Here we go. what we're looking for now is, I'm just looking to see, now that we're in on this reversal here, and we're looking for that level to trade below, come back into it. If you've got short there, I got short off of this here, return back to this low. And well, you're looking for an opportunity now to see a reversal happen in the other way. So I'm just managing this on the back end, coming down and waiting for a reversal to show itself. Then I'll get out there, use that as my method for unloading. Also pay yourself right there at that point. There's your consequent encroachment. So once again, if it gets through here, you're going to be wish you paid yourself at the 50%. That's what I'm looking at right here to see if we can, this is giving us a reverse. Look at this candle here. Not just run up above this. I want to see this candle get taken out to the upside and use that for support to come back into that range. If that be the case. See how we haven't got a body above it yet. A little high taken, fair value gap here. You want to see this taken to continue going lower. So oil, look for those relative equal highs at 68.85. Body opens on it. Literally closes on it, opens on it. We're starting to look to go higher now. We've come back inside this little fair value gap here. So keep your eyes on these little fair value gaps and support levels. So I think that's the wick is. Let me just get this thing out of here. I don't know where the wick is right now. The wick is right there. See how the body trades above it, inside it. Now we already get above here. Opens literally on it and continues going higher. This is why you pay yourself at that 50%. And this is where mine failed, so I got out right here. As soon as we started coming back into this range again, it took me out right there. That was my fail safe there. So if this runs up and through here again, see how it freezes on that. So if we can get this start to kick back up here again, start taking out this candle's high, then I'll start considering that more of a run back into this range. But right now it's just looking for a little support inside here. We've created a fair value gap here, found support, broken the SIBI on the other side, and we're coming back inside that candle now. So we're inside this range from here to here, but I want to see that candle there get taken to the high. If not, you want to see the this low and that candle get taken on the downside close. Now see how we've traded below it, back inside this range, discount array here. There's a small one right here. I'll move this one over here now. That's all I do is just keep jumping back and forth between those inside the range. I've got a premium and I've got a discount. If we take out this low, I look for this fair value gap to give us something if this doesn't, this low doesn't get taken. So we turn back into this order block here. This candle's mean threshold. Well, right back into the consequent encroachment of that. So we just traded below it. Didn't see that. I was looking at this candle here and this. So you didn't want to see it get through the mean threshold of this candle. Looking at the consequent encroachment of the regular trading hours, we just popped below it, ran into it again, and now we're going lower. Looking for a fill now. A regular, oh, there's the new day opening gap high. $84.75 point. Yes, it's going to go high. I have new day opening gap low at 18,444. What do I have as a new day opening gap here? Sorry. What is this new day opening right here? That candle's open is 399.50. Excuse me. And you have usage of the new day opening gap. Something is amiss. That should be a close from Friday at 4:15 p.m. Well, you're right. Let me just go back to Fridays here. Friday's 4:15, 443, right here. This is the consequent encroachment. I haven't even put this one in here yet. This is the new day opening gap. Low. Well, that's new week. What am I putting new week in there for? That should be close on Friday 4:15 and end 9:30 a.m. today. Random question. I'm listening to 2024 Mentor with ICT. He keeps mentioning comment about all the comments are disabled on the video. How do you comment on the video? Uh, you should be able to comment on mine below. You should be able to comment on mine below. If not, go back up to, I don't think you can chat right here. I don't have any of the mine disabled, at least that I know of. Thank you for good afternoon. See you tomorrow. The short to 50% of the gap was delicious. The chat's working. Yeah, everything seems to be working. The 9:30 open for the high. I look at Sundays. I thought Sunday was the Sunday's opening was the new week opening gap. Let's go back and look at that. Back up inside this candle here. No, we have no reversal through here yet. We just had to trade right back into that level. You want to see this continue on the downside now. Yeah. That's the new week opening gap. Thanks, Derek. Looking to see this candle here provide support. We get another reverse back up into here. I love this. It's just gone away from here now. And we have the continuation. Looking for the fill of the fair value gap or the 75%. Watch that. $18,497. $18,497. What do you see it on, Derek? Oh yeah, down here. We have a gap below us here. Take care, Abs. $11:30 a.m. and 1:30 p.m. on lunch line. ICT talks about, see what I see there. He's suggesting it could be a setup all by itself. Oh yeah. Look for that macro. Between there and 1:30. So here's near the 25%, 75% fill. If they leave that open, for oil, if we didn't get that 68.85, looking for the equal lows there below us at 67.18 now. Mean threshold of that candle has to give way in oil at 67.89. If it doesn't, there's a little fair value gap forming just above us there. And we got this guy here inside this, we're inside this small range here right now. Trade back up into that fair value gap and into this order block. 50% of that range. Let's see what you get. And then you're looking for the 11:30 to 1 p.m. or anywhere inside that box. So there's that level. I want to see what kind of support we get here. Or not this starts to roll over and come back down again. For optimum trade entry reversal, optimum trade entry reversal. Another reversal here. If we push higher, look for this fair value gap. It's got to give way on that one. There's the premium array, which is 50% of that new range opening gap again, which happens to line up perfectly with that little box right here. How it acts in here now. We're just up in this premium portion of that range now. I'd like to see this come down here and take this out one more time. At 11:30. Let's see what happens here. We find some support above here now. It's got to close above. We have a change in direction. Premium range. Take this high out. Find some support off this candle. Go higher. Inside this larger range now, we've got this array right here. Look at that, level here. So we're hitting that now. See where we close right now. Taking that high. Looking for these highs now. Did not get that taken out that low. We found support continuing on the upside here. And then through this. Drove through this one as well. Came back, found support at it. Through this one, found support at it. Start pushing higher. Value gap above you here. Oil's pretty much bouncing off that order block below you there at 67.93. It's off the mean threshold of that candle. Get rid of that thing there and look right here. We traded above it here, tapped it here, looking for higher prices. Oh, good morning, love. Got me a cup of tea now. Clear with a cup of tea. Maybe one of those slow, insidious little runs higher today. Back inside that range. Leaving that bottom portion of the regular trading hours open right now. What reaction do we get off of here? Going back to this, find support off of here. See if we can push higher now. If you see this giveaway, I'm gonna move this up to here. There's some support off of here now to go higher. See you later, Joe. Right at the consequent encroachment now. That's steady. We've taken out all these highs. This has to provide support for this order block. If we lose this on the downside, then you're looking for another run back inside this range. Oh yeah, where there's definite downside there in NASDAQ. So it is coming up a lot higher than I would hoped. And if we do get a run back up into here, or into this breaker here, or the opening, that open fair value gap he mentions. Adi, good morning. Darren, I have a question. We have 15-minute fair value gap, and we have a 5-minute bullish breaker to send price upside. Which one is stronger? Well, what level are you in? If you're in a stay in one chart over another, because right now I'd say this candle's mean threshold. I don't want to see it get taken. I want to see that going higher. If we go below this, then we're looking for it to go lower. That's just a 1-minute chart. So 5-minute chart, you're on a 5-minute chart. You don't want to see, that's quite a lot, significant drop. So you want to see it come back into no more than the consequent encroachment of that 1-minute fair value gap. Or you don't want to lose 50% of this wick on the downside. So top of that fair value gap on the 1-minute, that's as high as you want to see that come to. And then, or low as you want to see it come to, and then start pushing higher. So don't forget your wicks. That's what he's teaching in this mentorship now. So keep that in mind. And 15-minute. You're inside this fair value gap on the 15-minute. You're inside this big breaker right here on the 15-minute. Look for the consequent encroachment, or sorry, the mean threshold of all those candles. And see if that holds price inside here. And you drill all the way down to that 1 minute. And that's what we're looking for as support. So you see how they're kind of overlapping their levels. Where I want to see this support, the 5-minute, you want to see half that wick supported. And the mean threshold of the 15-minute candle, you want to see that give way and start going higher. If we start to see it fail here, you should see those 15-minute key points start give way as well. Just looking for this upside objective here now. Oil had a nice little CAM Model 1 entry. If you look at this consolidation right here, consolidation, prices up, trades up above it, CAM 1 model entry. You're looking for trading through this. You've got to get through this CAM model here. So if you're going from one to the other, it's a small range. So you want to see that start climbing up above here. Equal highs. Go higher. We've taken out that low created the consolidation, traded above it, came back into it, and now you're looking for all these equal highs above here, and take out that high there. Through this breaker, back inside it. Continue going higher. You want to see it break through here though, and take out this candle's high. Before you leave for the day, would you walk through the crude oil chart again? Thanks, yeah. So you got your reversal this morning at 10 o'clock. This is your silver bullet entry. Well, no, it would be your silver bullet entry. But you see this low taken out here. You see this reversal here. Trade back into it to go long. You're inside this range. If you wait for this candle to get traded back to, it literally doesn't. It wicks through it, trades through, so you wait. If you've missed this one and this one, look for 50% of the range. There's your morning open gap. The first one of the day, comes back into it perfectly, continue through. Gap, breaker. This is a breaker that takes out this low. This is a breaker that runs these highs. This one takes these lows. So you start trading through the mean threshold of that breaker, back inside that fair value gap here, and then finally extend the highs. So you want to see this hold price or reverse and go back down once this high is taken, and it doesn't. You have another small reversal here now that this low has been taken out. So if you can't catch this one with one candle, wait for a return to this candle. It runs through up, and you don't get an opportunity to get on that one either. Look for this swing high here and this mitigation cluster here. We got, yeah, no. This is the candle I'd be interested in it coming back to. If it doesn't, look at consequent encroachment of this candle here. As soon as we trade through that, you don't want to see it trade back through that. So as soon as we get a body through this consequent encroachment, and you get a body through it right on this candle here. So there's the consequent encroachment right there. We come back, tap it, and then go higher. Reversal. You see a reversal here. These highs are taken. Those highs are taken. Reverse inside this range. And you got swing here, swing here. Yeah, they're right back to this old high here. This one's a tricky one. So if you catch this as the reverse into that range, you got to keep an eye on these fair value gaps, small. Let me have a look at that, what that is there, even if it's 50% of that range. Yeah, just over 50%. So if this is the range you're looking at, a retracement, if you catch that reverse right there of this guy, you trace back into it and catch that to 50%, take half of your trade off, move to break even, If you get 62% out of that, which I'm not sure you did. Nope. You don't get 62% of the retracement. It comes back to break even, takes you out. So you got half your trade off there and the other half is there. So you wait for your reversal. You've got a low taken here. You got a little swing point here. Reversal here. From here to here, you have a reversal. See, there's a little gap right in here. This fair value gap and this imbalance. So you traded above the imbalance here and this fair value gap on the close. You traded back into it here. A little wick down below it, but you traded back into that imbalance here. You ran for the highs. If you were running back inside this range, you'd pull your fib tool on that as well, and you do that run back into here. If you chose to hold on to that through the mean threshold of that candle, then run the highs, equal highs above you, and wait for a reversal. Nothing, nothing, nothing. We don't have a BISI reversal until here. And we traded below it here, but you didn't get an opportunity to get back in on it here. So you wait for the low to get taken. It does right here, and you don't get an opportunity to get in on it here. If you looked at this candle, traded below it, come back up inside it right here for a short inside that inversion. Again, we traded below it. Yeah, I'm looking at all these little, the moment we trade, I'm just using the same rules that I've told you guys about before. I want to make sure that I'm not just, you think I'm just form fitting this, because I don't want you to think that this is just easy to go back through the charts when you can see where it's going. I want you to see the logic behind it. So we have a swing point here. We trade below it. So look for here or to break the discount inside this range. It breaks the discount, trades back up inside it right there. There's the perfect entry for a short there, if that's off this inversion we're talking about. So that's the same rule we normally apply here. Can't get that one. We look for the one that starts the whole range, which is this guy here. You want to see that be taken on the downside, or proof that the discount array is closed below. So we've closed below the discount array. We traded back up inside it. Now we take the low. You don't get an opportunity to get in on it before you continue going lower. You take this low, look for the next reversal, which is here. You don't see it. A new one is created right here. So you look for that level right there. You're above it, below it, above it, below it. Finally takes out this low. You go above it again. You may go, not even going to touch this until we get back into that order block. If we get above this order block on a close and come back and tap it, maybe I'll go long. I'm inside this range here. I'm already over 50%. Leave it alone. Because there's a small imbalance right here. You trade above it, you don't get a chance to get back in on it. We have a fair value gap here. You close above it, you don't even come back and tap it. So there's no opportunity to get in on oil in this part here. So a bit choppy on price action this morning. So now you want this premium array up here. These little imbalances. As an upside objective for now. And then these old high. It's got to get through this, find support, and continue pushing higher. That will extend the range. If not, you're back inside. You're stuck inside this one. And it's a lot of chop right now. Sorry, it's not clean price action, Craig. There you can see reversals here, but look at this one here. If we traded above it, you would think, oh, okay, we're going long. So as soon as we can get back into this level here for an optimum entry, then it closed below it. You're like, ugh, my stop loss is here if I'm going long. It squeezed your stop loss, finally came back up, give you an opportunity to get out at break even run you through with a bit of profit if you held it. Not that you should. If you get an opportunity to get out and wait for a reset. It does the same thing again, pops above and pops below. So wait for this upside. If this fails once, twice, goes up here 3 times, 4 times, finally takes out this low, you'd be in, out, in, out. You'd be getting constantly bashed around inside here because it keeps trading above that level. So as soon as you get on the wrong side of it once and you get an opportunity to get out, wait, because now you're in. You want to see something cleaner set up. And if that's in above 50% of your range, then you obviously don't want to get inside that. Once a low is taken, wait for another fair value gap to form or an imbalance, and you got it right here. It traded above it, but you never got an opportunity for this to wick back into it. You have another one here. You actually gapped up above it, so you didn't get a chance to come back into this. Old high, you traded, literally opened on the high, traded back into that fair value gap right there. I wouldn't have caught that either. I wouldn't have trusted it either. So, too choppy. And then when we get back to here, we're still aiming for that. And how we act inside that, we'll find out soon, but that's the upside objective we're looking for there. Did that help at all, Craig? Because I didn't want to make it look like it was all form-fitting, but it's really choppy, and for whatever price action you see in there, it is super choppy right now. Definitely not clean. That'll beat you up in there. That's a buzzsaw. But I'm looking for this little area of interest right here. If you can catch that and run through it, great. But if this ends up just coming back up to, we're already in that imbalance right there. You see that? Yeah. Mean thresholds holding right here. This wick, 50% of that wick, you want to see that just hold price and then push higher. If you lose 50% of that wick, these equal lows, and then I run back into this range here again. Is my thoughts. This is really choppy price action to be in right now. Not something you want to be messing around with. If you didn't catch a nice clean run this morning off of this 10 o'clock for a run back into this range and take out that liquidity above the market there, then when you get into this little buzzsaw activity here and you're into lunch hour, 11:30 takes out the low. We're returns. Yeah. Watch here now. There you go. Now you want to see that climb through that and start taking out the highs. If it doesn't, that's the upside objective. Now, if we lose 50% of this wick on the downside, then we're looking for a run back into this range, and the area of interest for you is it down here. So see how it acts inside that level. I just want to see that just tear right back through here now and take all of these people that are trying to go long and run back through them. If we close above that, then we're looking for higher prices. Look for 68.84. Swing, fair value gap. You want to see that provide support to go higher as a stepping stone. If it gives way and we lose this low here, look for 50% of this wick and then a continuation. Well, I'm looking for it to run up into this premium array here, and whether or not we find support off of this to go higher, to take out those highs and get back and take the morning low out or morning high out to go lower, or we just run back up into this range and roll over and come back down again. That's my thoughts on that one. We'll see how this level holds during lunch hour. And then oil. Right back in the mean threshold of this candle. This candle's open is where the body's found some support. We just literally gapped down to this. Now we're pushing through this, looking for higher at 68.84. Got to get above it though, not just a wick. See how we came all the way back up to rebalance these areas, this imbalance here and this little imbalance and fair value gap, premium array. Body still haven't closed above it yet. Now again, if you start to lose this on the downside, you would take this candle out here, look for this candle and that fair value gap to provide support to continue going lower. If not, I would like to see that continue climbing higher. So that's 10:15. It's like lunch hour for me. Okay, so I'm out of here. I'll see you guys tomorrow. Hope you have a great day. I'll talk to you soon. Sorry it wasn't super fun this morning, but the opportunities are scarce. It's on a Monday, so take your time. Don't rush anything. And just wait for the market to settle out on Monday and give you something clean for Tuesday, Wednesday. All right. Anyway, I hope you guys had a good time. So I will see you guys tomorrow morning at bright and early at 9 o'clock New York time. Take care. Have a great day. Say hi to your family. Give your family a hug. Go hug your farm and go out and enjoy the day or the night or get to bed.